What's up everyone? Welcome to my new video where we're going to be going over how to actually establish a proper daily bias so you're always in line with the market. I see newer ICT students get confused with bias and there are a lot of misconceptions around it. So today I want to clear that up and I'm here to explain how to actually stay in line with the market. Now, the very first step to establishing an intraday bias is to predict the direction of the weekly candle. So as you can see, we're on DXY weekly chart, and I just want to point out the importance of order flow. So take a look at the price action here. We left this wick and then came up. And what do I always say to look for? A break in market structure below this low. Price came up, tapped into the weekly order block, which was left here, broke down, IO fed into this daily fair value gap. Why is it an IO fed? Because if you look to your left here, we've got a gap on the other side of this curve. So when we have a gap in line with this new gap, we can expect an IO fed, which is price wicks in quickly and then runs away from that fair value gap towards liquidity. So in this example, I just want to point out how when we break lows and then respect new premium arrays like we did here, and again once more and down towards liquidity, that tells us our order flow is bearish. We want to be trading in line with this order flow even on the daily chart. So drop down to the daily chart and point out three things we need to consider when establishing our bias. Firstly, the daily time frame order flow. Secondly, is price rebalancing an imbalance? And third, is price seeking liquidity? So these two, the bottom two, sort of link into each other in a way that price will only do two things, and it is either one of them. So price will only trade to an imbalance, or price will only trade to seek out liquidity. So let's take a look at this bit of price action here from this low to this high, and I want us to analyze from here down towards taking out the sell side liquidity. So put some lipstick on the actual chart. Firstly, ran up, higher high, lower low. This becomes a breaker, this bit of price action here. Because it's choppy, you can just not mark it up and keep it in mind that this pattern here is actually a breaker. Price ran down below this low, shifting market structure, and then came right back up into a premium where we sold off. I think it actually wicked into this volume imbalance here, but the daily fair value gap rejected off there. As soon as we do that, we're now in the order flow of bearish, and we set our target. So we come down here and we look for a logical target. So remember what I said, price either rebalances an imbalance or seeks liquidity. What is it doing here? Rebalancing an imbalance in price right here. What's it going to do next is seek out liquidity. Where's liquidity? As soon as we trade into this imbalance, liquidity is now here. On a lower time frame, this formation is, a nice move on the 1 hour or the 15-minute down to this low. We do it again, trade much lower, new week, open up, tiny small fair value gap in here, trades into. So what have we done? Rebalance and imbalance again. What will price do next? Look to seek out liquidity. And remember, in the long term, our bias is bearish because of the weekly expansion candle. We expect it to go lower, as on the weekly we've been respecting premium arrays and trading lower for a long time. So we took out this high. Our new target is down here. Every time we trade into a new premium array, so look, as we did that, came down, we left two up close candles. And what should price do when trading lower? It should respect these up close candles. Trade into it, price respects it. Notice how the bodies of these candles here, the wicks in, closes below. The bodies of the candles tell us where, it gives us a hint as to where price is going next. The real volume is in them wicks. That's real volume. Wick into it and then trade lower towards sell side liquidity. So you guys saw a bearish example here. I want to now give you a bullish example. So we took out the sell side liquidity, price ranged for a bit, consolidation, and then once we created a high, low, speed and distance, we ran past this high, which is our shifting market structure marked up by the light bulb here. Ran up, what can we expect here? Fair value gap, mitigated. As soon as this happens, now our order flow is bullish. We've switched to bullish and we start looking for targets. So what can we look for? This in here, these two fair value gaps. Remember, price will either seek liquidity or go to seek rebalance and imbalance. So here, trade up again, down again, respect another array, discount arrays now. Remember, we're looking for these targets. Trade in, and notice how this balanced price range here, so we have a gap on this side, price broke below and left another gap. This becomes a balanced price range here, so that would have been my target. And notice how as soon as we reach into this balanced price range, price is reluctant to go up to this liquidity up here. Look how many wicks we left and how many bodies kept closing below the next body, and then eventually we got a shift, started heading lower. Price will again seek out an imbalance. Look at that right there, another imbalance, break lower, and then all these failure swings down here, low resistance liquidity, price ran down and took out the liquidity down here. So my point is, when we traded up into this imbalance, what can we expect now? Price to trade to some liquidity. What did it do? That alone is some liquidity. After that, back into an imbalance, and then back down to some liquidity here and here. Now, a new example on EURUSD, daily time frame, bearish order flow. Why? Because premium rays are being respected. Notice how, okay, that was wrong. Now, EURUSD example on the daily time frame. What is our order flow? Bearish, because we are respecting premium arrays. So, massive leg lower. As soon as we trade into this imbalance, what do you expect? We expect price, because we're bearish and our draw and liquidity is further below here. As remember, on the weekly time frame, we're predicting the expansion of that candle. Because our draw and liquidity is lower, we're expecting the weekly time frame to trade lower. So when we drop onto the daily time frame, what can we expect also? Price to trade lower with more momentum than the weekly, and more opportunity to catch moves, because of course we're on the daily time frame trading with a weekly or a monthly bias in mind. So rebalance and imbalance, where can we expect price to go now? Seek liquidity down here, and then a huge leg down again, big retracement. Even when we're retracing to a premium array, which is this mitigation here, and fair value gap, but I labeled it mitigation because the fair value gap's such a big one. Even when we're trading back up to premium arrays, notice how we're still respecting discount arrays. So look, leg up past this high. What's this? Discount. Comes up, seeks out liquidity again, chops around a bit. But this is the thing with daily bias. Once you've got a weekly bias in mind, you can expect daily retracements. So just because your weekly bias is bearish and we're expecting price to trade lower, some price will need to retrace at times, and that is when you can catch counter trend moves where we break above the high, trade into a discount, and then trade towards our premium array, with of course our higher time frame bearish bias in mind. Now I'll take you down into one of these premium array examples to show you how on the 1 hour chart the price action is really clean once we touch into the premium array or the imbalance, and then price should seek liquidity. It's really clean on the 1 hour. So we are inside this daily order block down here. I'll take you inside this price action here towards this low. So on the 1 hour chart, price wicks in, creates a low, came up. What's this? Because we didn't take out this high, a failure swing, we can expect price to move lower from here, and it does, with momentum as well. That candle closes on the failure swing. The very next candle, as soon as it opens, huge drop down. Where did we go? Below this low. So now after we break the low, what's our order flow? Bearish again. So notice how the same concepts that we use on the daily time frame can be used on the 1 hour, because price is fractal. And then broke past the low, and then we have a balanced price range on there. We can expect IOFED to occur. It didn't, except we wicked in. I would be expecting IOFED here, so I would have took a sell from here with my stop either above this high or on the imbalance. Anyway, price traded in, came off, and then what are these up close candles here? As we trade lower, we expect up close candles to be used as actual resistance. So retail think this will be resistance or whatever, but these are actual resistance. Notice how price struggles to even get above the first up close candle, and then you can take a sell from here, stop loss above here, massive run lower. Again, we left a fair value gap on this run lower. Price hasn't yet taken out our sell side liquidity target. Price trades into the 50% level, but in this fair value gap, which you'll see often on huge moves down or up. You'll see the 50% level used here, drops right down. That's another sell. Stop loss above this high or this high. Another sell down towards our sell side liquidity. So once you have a daily bias in mind, everything else on the 1 hour, on the 15-minute, on the 5-minute comes into shape, and it acts as a magnet. The daily time frame target will act as a magnet, and all the lower time frames will look to trade into that. So I want to take you back to this daily chart, and then afterwards we'll drop down to the 1 hour so I can show you how to once again use your daily bias on a smaller time frame. So I want to focus in on this bit of price action here. And remember, bearish order flow, expecting expansion downwards on the weekly candle. So once this fair value gap's traded into, what can we expect? Downwards momentum. This gives us our daily bias we're actually looking for. There's a sell side liquidity target down there, and so as soon as we trade in here, target down here, our daily bias is now bearish until we reach here. So drop down to the 1 hour. This is that daily fair value gap I just pointed out. Price wicks in once, doesn't really give us a shift in here. Price comes in again, creates a low, creates a failure swing, the same pattern I showed you, breaks much lower, past this low. So what does this become? Our shift in market structure. Price comes back up into this fair value gap here and this balanced price range, wicks in, that's a sell. I personally wouldn't sell from there, I'd wait to break lower. We break down once again, look at this momentum, and then because we have a high, low, higher high, broke down past lower low, what does this become? These down close candles here become our breaker. So inside here, once we trade past this on this candle, we can expect price to reject off this breaker. And what does it do? Trades into the imbalance and the breaker, shoots lower straight off of this. Then once again, price came up. That's another sell inside this fair value gap. Creates a lower high here, came down, and then takes out this lower high. So liquidity was taken here. Then once again, break lower, fair value gap, sell, stop loss above here, just in case price wants to come back and trade into this fair value gap. We traded into an imbalance where we're going to go next to this liquidity down here and keep trading lower. So that is how you use the weekly candle, and then due to the weekly candle being bearish, the daily candle or candles gives us our actual bias. Use the daily and then use the 1 hour to frame a trade. And that brings us to the end of this little slideshow here, where I taught you how to find a bias and how to use it properly. So I just want to thank you all for watching. Those of you who made it towards the end, make sure to leave a comment below, and if you want to connect with me or join any of my communities, I've got a public Telegram which you'll find all over my Twitter and Instagram, which is the same as my YouTube channel. So make sure you like and subscribe if you enjoyed. Turn on post notifications so you never miss a video, and I'll see you all in the next one.